In May 1848, a man named Samuel Brannan stepped off a ferry onto the dusty docks of San Francisco. He was waving a glass vial filled with yellow dust and screaming at the top of his lungs, "Gold, gold, gold from the American River." Within 24 hours, the city was empty. San Francisco, then a fledgling settlement of barely 800 people, became a ghost town. Houses were left half-framed. Ships were abandoned in the harbor as entire crews vanished into the Sierra Nevada. The California Gold Rush, the greatest mass migration in American history, had begun. But if you look at the ledger books of that era, a chilling pattern emerges. Of the 300,000 49ers who descended on the hills, the vast majority returned home with nothing but broken health and empty pockets. They had chased a dream of sudden wealth, only to find that the earth is a stingy master. Yet, one man didn't just survive the rush, he conquered it. Samuel Brannan didn't spend a single day panning for gold in the freezing waters of the American River. He was too busy buying. Before he let out that legendary scream on the San Francisco docks, Brannan had spent every cent of his liquidity to purchase every single pickaxe, shovel, and metal pan in Northern California. He cornered the market on hope. A pan that cost 20 cents in New York was suddenly being sold in Brannan's store for $15. That is a 7,500% markup on the basic tools of survival. Brannan didn't need to find gold. He had found something far more valuable. He had found the bottleneck of the empire. He became the first millionaire of the American West by taxing the desperation of the masses. Fast forward to December 2025. The colors have changed, but the math has stayed exactly the same. We are currently living through the most aggressive resource scramble in a century. They call it white gold. It is a soft silver alkali metal known as lithium, and it is the lifeblood of the 21st century global empire. From the sleek glass of the latest smartphone to the massive battery arrays powering the AI data centers of Northern Virginia, lithium is the singular requirement for the modern world to keep turning. To the average investor, the path seems obvious. The headlines are screaming about a 2030 cliff, where demand for lithium will outpace supply by 500%. The panic is palpable. People are rushing into mining stocks, hoping to strike it rich in the salt flats of the Lithium Triangle or the hard rock mines of Western Australia. They are the new 49ers. They are looking at the ground, certain that the next big strike will secure their fortune. But just like in 1849, a quiet group of modern-day Samuel Brannans is moving behind the scenes. They aren't interested in the lithium itself. They are interested in the shovels. In this video, we are going to peel back the layers of the global lithium rush to reveal the hidden architecture of the energy transition. We will explore why the 2024 lithium price crash was actually a signal for the elite to consolidate power, and how a specific bottleneck strategy is being used by the world's most powerful nations to ensure that while you mine the gold, they own the empire. If you want to understand how the real money is made when the world is in a panic, you need to stop looking at what the crowd is buying and start looking at what they can't live without. The lithium mirage. To understand why the current lithium market is a graveyard for retail investors, you have to understand the anatomy of a bubble. In late 2022, the price of lithium carbonate touched $80,000 per metric ton. It was the peak of global euphoria. Governments were mandating a total ban on internal combustion engines. Tesla was valued like a sovereign state. Lithium wasn't just a commodity, it was the new oil. The headlines promised that anyone with a claim and a shovel was about to become a billionaire. Then, the floor fell out. By late 2024 and throughout early 2025, the price of lithium didn't just drop, it vanished. It collapsed nearly 90%, bottoming out below $10,000 per ton. The white gold was suddenly worth less than the cost it took to pull it out of the earth. In Western Australia and South America, massive mining projects were mothballed overnight. Multi-billion-dollar corporations like Albemarle and Mineral Resources saw their valuations shredded. The 1849 miners who arrived in California after the surface gold was gone would recognize this feeling instantly. It is the silence. After the gold rush, why did this happen? It happened because of the fatal flaw in commodity mining, the time lag. When prices are high, everyone rushes to dig. But a lithium mine takes between 7 and 15 years to go from discovery to production. By the time the new supply finally hits the market, the demand has often shifted, or the initial frenzy has cooled. This creates a supply glut, a mountain of metal that no one needs right now, which crushes the price and bankrupts the very people who rushed in to save the day. But here is the secret of the empire. While the price of raw lithium was crashing, the demand for the final product, high-density battery cells, was actually continuing to grow. This is the lithium mirage. The raw material is in a slump, but the infrastructure it feeds is still accelerating. In 2025, global EV sales topped 20 million units for the first time. The grid-scale batteries required to stabilize the world's solar and wind power are being installed at a record pace. If you are just looking at the mining charts, you see a disaster. But if you look at the supply chain, you see a consolidation of power. The big players are using this price crash to wipe out the small miners. They are buying up the distressed assets for pennies on the dollar. They know that mining is a low-margin, high-risk game. They are waiting for the 2030 cliff, the moment when the delayed projects from this year's crash create a massive supply deficit 5 years from now. If you want to survive this cycle, you have to stop thinking like a miner and start thinking like a monopolist. You have to identify the bottleneck that remains profitable even when the commodity price is zero. In the next section, we're going to look at the one place where the price of lithium doesn't matter, because they own the shovels that everyone is forced to use. If you want to see the blueprints for the next phase of this empire, hitting the subscribe button below is the only way to ensure you don't get left behind in the next rush. We're moving from the mud of the mines to the fire of the refineries, the monopoly of the midstream. If the lithium mine is the gold field of the 1840s, then the chemical refinery is the shovel. In the era of the 49ers, a man could stumble upon a nugget in a creek and, with a bit of luck and a metal pan, change his life forever. But the white gold of 2025 doesn't work that way. You cannot simply pull lithium out of the ground and put it into a Tesla in its raw form, whether it's the spodumene rocks of Australia or the salty brines of the Andes. Lithium is essentially useless to the high-tech empire. To be functional, it must be transformed. It has to be refined into battery-grade lithium carbonate or lithium hydroxide with a purity level of at least 99.5%. This is not just a simple washing process. It is high-level chemical engineering. It requires extreme heat, precise acid treatments, and massive capital expenditure. This is the midstream. It is the industrial bridge between the dirt and the battery, and it is here that the modern-day Samuel Brannans have built their fortresses. As of December 2025, the global map of lithium refining reveals a staggering truth. While the West was focused on the romance of mining, one empire quietly cornered the refinery. China currently controls approximately 70% of global lithium chemical processing. Even more striking is their 95% near monopoly on lithium iron phosphate, or LFP. This is the specific cathode chemistry that is rapidly becoming the standard for affordable EVs and massive energy storage grids. This is the ultimate bottleneck strategy. You can spend billions of dollars opening a mine in Nevada or Canada, but if you don't have the specialized facility to turn that ore into a battery-grade chemical, you are still just a miner in 1849. You're holding a handful of dirt and hoping someone will buy it. By controlling the midstream, China has effectively placed a tax on the entire global energy transition. They don't need to own every mine on Earth, because every mine on Earth eventually has to send its material to them to be made useful. This is where the high-stakes game of empire economics truly happens, beyond the stock ticker and the surface-level news. It's about who controls the conversion. In late 2025, we are seeing the US and Europe scrambling to build their own shovel factories. The US government's recent multi-billion-dollar investments into domestic refining projects are not just about business. They are about breaking a monopoly. They are trying to build their own Samuel Brannan infrastructure before the 2030 cliff makes them entirely dependent on a strategic competitor. If you're following the money, you'll notice that the smart capital isn't flowing into the hundreds of tiny junior mining companies that litter the stock exchange. It's flowing into the giants who are vertically integrating, the companies that own the mine and the refinery. They are building a closed loop where they control the gold from the moment it leaves the ground to the moment it enters the battery. If you want to understand the next move on this global chessboard, make sure you are subscribed to Empire Economics. We are tracking these supply chain shifts in real time because in a resource war, information is the only asset that doesn't depreciate. In the next section, we're going to look at the Levi Strauss of 2025, the players who are figuring out how to bypass the mines entirely through a process that could make the traditional gold rush obsolete, the circular empire. If Samuel Brannan was the man who sold the shovels, then Levi Strauss was the man who realized that the miners themselves were the primary resource. Strauss didn't care if a man found gold or died trying. He knew that every single one of them needed pants that wouldn't fall apart in the mud. He built a multi-billion-dollar dynasty by creating a loop, a product that was essential to the process of extraction, but existed entirely outside the volatility of the mine. In the white gold rush of 2025, a new Levi Strauss model is emerging, and it is perhaps the most disruptive force in the entire history of finance. It's called circular economics, or more simply, battery recycling. For the last decade, the world has been obsessed with the front end of the empire, digging deeper, refining faster and shipping further. But the smarter money is now looking at the back end. Consider the mathematics of the 2030 cliff. If the world truly needs 5 times more lithium than we currently produce, and if it takes a decade to open a new mine, the math simply doesn't add up. We cannot dig our way out of this deficit. This is where the circular empire takes over. Every Tesla, every iPhone, and every grid-scale battery pack produced since 2015 is essentially a high-grade lithium mine sitting on wheels or in a pocket. In 2025, we are seeing the first massive wave of EV batteries reaching their end of life. But in a world of scarcity, nothing truly ends. It only transforms. Companies like Redwood Materials and Li-Cycle are the new infrastructure of this empire. They are building massive urban mines, facilities that can take an old battery and recover 95% of the lithium, cobalt, and nickel inside. This is the ultimate picks and shovels play for the 21st century. Why? Because recycling is immune to the geopolitical chaos of the traditional gold rush. You don't need to negotiate with a foreign warlord or deal with the environmental permits of a deep pit mine. You just need the scrap. This shift represents a fundamental change in the empire economics playbook. For 2 centuries, wealth was built on the linear model: take, make, and waste. But as we approach the limits of the planet's resources, the empires that survive will be the ones that own the loop. In late 2025, we are seeing the emergence of battery passports, digital fingerprints that track the minerals in a battery from the moment they are refined to the moment they are recycled. This isn't just about the environment, it's about asset retention. If an empire owns the lithium once, it never wants to buy it again. This is why the high net worth audience, the institutional funds, and the sovereign wealth offices are pivoting away from the volatility of junior miners. They are moving towards supply chain service companies. They are betting on the players who provide the denim for the green revolution. They know that while the price of lithium might crash again in 2026, the necessity of managing the existing supply will only grow. If you want to understand these invisible shifts in the global wealth structure before they hit the mainstream headlines, you need to be subscribed to Empire Economics. We aren't just looking at what's being dug out of the ground. We're looking at how the ground itself is being redesigned. Because in the end, the gold rush isn't about the gold. It's about who controls the system that moves it. The 2030 cliff and the final verdict. As we stand here in December 2025, the lithium market is sending a clear, albeit confusing, signal. Prices have begun their tentative climb back from the depths of the 2024 crash. Currently, they are hovering around 97,000 yuan per ton. To the casual observer, this looks like a simple market correction. But to the student of empire economics, this is the preamble to the 2030 cliff. By 2030, global demand for lithium carbonate equivalent is projected to hit 3.7 million tons. That is nearly doubling our current capacity in just 5 short years. The cliff isn't just a metaphor, it is a mathematical certainty. Even with the massive recycling infrastructure we discussed and the frantic opening of new shovels in the midstream, the sheer velocity of the energy transition is outstripping the Earth's ability to yield. We are entering a period of structural scarcity. In this environment, the winners will not be those who guessed which small mining stock would moon. The winners will be the entities, be they corporations or nation-states, that have successfully integrated the lessons of 1849. Samuel Brannan died a poor man, despite his millions. He chased the prestige of his wealth and lost it in land speculation and legal battles. But his strategy, the picks and shovels mindset, is what survived and built the modern American West. The empire doesn't care about the individual miner. It cares about the flow of the resource. Today, the lithium empire is being built by those who control the flow. The refiners in China, the recyclers in North America, and the sovereign wealth funds quietly buying up the bottlenecks. If you are looking to build a legacy in this new white gold rush, you must look beyond the shine of the metal. Ask yourself, who owns the conversion? Who owns the recycling loop? Who is the government subsidizing to ensure the empire doesn't collapse? The history of finance is a history of bottlenecks. From the spice trade of the 1600s, to the oil barons of the 1900s, and now to the lithium refiners of the 2020s. The blueprint for extreme wealth has never changed. You find the one thing the world cannot function without, and you stand in the middle of the road. The 1849 gold rush was a frantic, disorganized scramble that left a few men rich and a generation broken. The 2025 lithium rush is a calculated, geopolitical chess match played with the survival of global industry on the line. As the 2030 cliff approaches, the noise will get louder. The 49ers of the digital age will flood social media with the next big tip. But you now have the historical context to see through the mirage. Stay analytical. Look for the bottlenecks. And most importantly, keep your eyes on the supply chain, not the soil. If you found this deep dive into the hidden mechanics of wealth and history valuable, ensure you have subscribed to Empire Economics. We will continue to track the movement of the global board, revealing the historical patterns that govern our future before the rest of the world catches on. Because in the end, history doesn't just rhyme, it pays.